Hello, welcome. Welcome to today's session of Carrying on the Structured Warrants Path by Maybank IB. Let's just give it a couple moments for everyone to join before I begin. I see people starting to come in. I hope everyone has a wonderful long weekend. I hope you guys have a good rest, went for your trips, shopping malls even. And also, it's the second half of the year right now. I hope you have achieved most of your New Year's resolution. If not, I hope you're on the way to achieving your New Year's resolution. Okay, I see more people coming in. Okay, all right. I hope all of you have your lunch ready. If not, you have your lunch with you here today. And I'll begin shortly. All right. I guess most people are already in. All right, let me begin. So good afternoon all. Welcome back to Maybank IB's educational webinar, Carrying on the Structured Warrants Path. This is actually a continuation of last month's educational webinar of Path to Trading Structured Warrants. So before I dive deeper into today's topic, allow me to introduce myself. My name is Tucker, and I'm with the Equity and Commodity Derivatives team here at Maybank IB, and I'll be your speaker for today. So for today's topic, we'll actually examine the ways of picking and trading the right structured warrants. So now let's have just a bit of a recap of the path to trading structured warrants. So firstly, you need to have a trading idea. So the formation of an idea alone requires time and research. Therefore, you may seek ideas from research reports, event-driven news flow, fundamental or technical analysis, or better yet, from Maybank IB's Telegram channel, Trade with Maybank. The team behind the channel posts trading idea daily with the hashtag daily highlights and warrants watch. The team curates it specifically for trading opportunities paired with structured warrants. And secondly, once you have the idea set, ideas without actions are worthless. So we have to determine the direction. We want to take that with that idea, either bullish or bearish. Adding on to that, it is important to know who you are in terms of investment style, investment horizon, risk appetite, and we'll get into that in the later slides. Now, once the idea is set, the direction has been taken. It is now time for the selection of your structured warrants. So 3 key characteristics to consider when selecting a structured warrant are its sensitivity, effective gearing, and premium. These 3 characteristics should form the foundation when you're selecting a warrant. Fret not, we'll go through an example later on when you're picking, comparing, and selecting a structured warrants to be traded. After you have selected and bought your warrant, it is important to observe and monitor closely and not to leave the position unattended. With the passage of time, a structured warrant will lose its value over time due to time decay. For the most part, when a share is trading sideways, though it has moved up just slightly, the structured warrant will still lose its value to time decay. And lastly, it is time for accumulation. Accumulating profits in trading structured warrants is an incremental gain process. Don't have the mindset of aiming for windfall profits, as it won't be beneficial to you. And also always have a target price to enter and exit your trade and be comfortable of small profitable trade. As the saying goes, sikit-sikit, lama-lama jadi bukit, right? So before I move into my next slide, we will dive deeper into each step, all right? So let's start off with the first checklist to take off, which is ideation. As an investor, you may find it hard in picking shares to trade or even invest in. It is hard to come up with a trading idea alone when you don't have the time to research and scrutinize each and every listed company on Bursa. You may often find yourself raising your eyebrows like the guy in the slide. I truly understand that, because when money is at risk, you will want to make sure that the trade will be a profitable one. That's why we often find ourselves caught in the situation where we don't know which stock to buy. So this is why when you're generating your idea, it is best to seek out for research reports that covers fundamental analysis of the company, or you can head over to Maybank Warrants website, watching out for event-driven news flow over the company, or even conduct technical analysis on the share chart. So therefore, having the right idea and picking the right stock is the most important step. Stock picking is based on its merit of the share and your conviction of its direction. So the 4 ways in generating ideas and picking the right stock is: number 1, fundamental analysis. This will be analyzing financial statements, conducting financial modeling exercises, or reading research reports. Number 2, through our warrants website, which is Warrants Watch and Warrants Bulletin on the Maybank Warrants website, where the team curates notable news under Warrants Bulletin or trading ideas under Warrants Watch. Number 3, you have event-driven, like news headline that you see daily. And lastly, number 4, you have technical analysis. So for frequently asked questions. The first one is that, is structured warrants Sharia compliant? The short answer is no, because structured warrants is not Sharia compliant. To those investors who are investing only in Sharia compliant shares, please take note that structured warrants is not compliant to Sharia standards. Do not be mistaken by the fact that company warrants is Sharia compliant only when the company as the issuer and shares are Sharia compliant. And next, you must have wondered whether can you conduct technical analysis over structured warrants. Simply put, for technical analysis, it is best to have the chart on the shares itself, as it can provide you with a clearer pictures of trends, support, resistance, and price action of the share over time. This makes technical analysis possible and thus more accurate. Technical analysis helps to form a view of the direction of the share, and your view on that influences if you are to buy a call or a put warrant. All right. Hope that clears up most of the frequently asked questions that you have in mind. So once you have generated your idea, it is now time to determine your direction. So just like the headline says, what determines your destination is your direction. So from the previous webinar, I've mentioned that call warrant value goes up when the share price goes up, while put warrant value goes up when the share price goes down. Up or down, it is important that you got your direction right with the right warrant that expresses your bullish or bearishness. Both combination of a call and put warrants allow you to profit from either direction, making structured warrant an awesome and cool financial instrument to have during a volatile market. With a put warrant, you are allowed to express your bearish bias view and capitalize on the downside of the share. Put warrants allow you as an investor to effectively go short on a single underlying share. Year to date, there has been some trading opportunities to short in the market. You can check out the performance of Maybank IB issued put warrant, which is Top Glove HH, to know what I'm talking about. So to those who are unaware yet, you can consider put warrants moving forward. For your information as well, Maybank IB is the largest single underlying share put warrant issuer in the market. So whether you are a bull or a bear, Maybank is there for you to realize your trading opportunities. So now, on to the heavier part of this webinar. Once the direction has been set, however, you are still unsure of which warrant to buy, whether is it deep in the money, near to expiry, high effective gearing, or high sensitivity. For that reason, it is important to recognize your investment style and horizon. No two investors have the same investment style and horizon. Once you know your investment style, you can make better trading decisions in trading structured warrants. As the saying goes, no one knows you better than yourself. So the 4 common investment styles are risk taker, trend follower, day trader, and contrarian investor. So let's go through each one. Okay. Firstly, we have risk taker. So risk taker trading style goes for all or nothing, high risk, high reward sort of trading position. Risk takers seek for sharp event-driven movements in share price, such as when the Federal Reserve announces a 75 basis point rate hike, or when Bank Negara announces its OPR. So the trade position is also held for a short term due to that reason. Size of the trade position is also sized for in preparation for max loss scenarios. So a risk taker is prepared for max loss. So because you are taking up a lot of high risk, because you don't know whether if the Federal Reserve would raise interest rate by 75 basis points or 50 basis points, all right? So the risk taker is ready to lose all capital at risk in exchange for outsized and exorbitant profit opportunities. Next up, we have the trend follower. So as the name suggests, the trend follower believes that the trend is your friend until the end when it bends. So the trend follower will participate in an established share price trend, whether an uptrend or a downtrend, while anticipating a continuation. So trend follower trading style looks to ride on share price momentum over the short to medium term to realize more predictable price patterns. And the third style that is common is the day trader. So the day trader gets in and out of a position within the day, also known as intraday, or holding for a short term of about 1 to 2 days. So the day trader's objective is to scalp for quick profits with a defined stop loss from structured warrants that react to intraday or short-term spikes in the underlying share price. And lastly, we have the contrarian investor. So the contrarian investors hold a view that is contrary to the expectations of the market, and the contrarian investor seeks oversold and beaten down shares or overbought and highly rallied shares in anticipation of a looming rebound or a correction. So generally, they seek for shares that are ripe for a reversal of trend in the market. The contrarian investors invest for a medium to a slightly longer term to watch their strategies play out and develop. One may also adopt the dollar cost averaging, in short DCA, to average down its entry price through having a lower weighted average price. Okay, so now once we have known the 4 common styles, let's see what is the risk appetite for each of this investment style. So once you have recognized your investment style and horizon, it is time to know what is your risk appetite. Whether you are a risk-averse trader or a risk-on trader. Knowing your risk appetite would allow you to understand which type of warrants are better suited for you in the market, as well as its associated risks. Let's begin with the risk taker. In the previous slide, we've explored that the risk taker goes for all or nothing short-term trade. This type of investment style trader will usually look for a structured warrant with the highest gearing due to its low warrant price. So gearing is a multiplying factor which symbolizes the amount of capital otherwise required for a structured warrant holder to gain the same exposure to the underlying share. A high gearing provides the risk taker even more leverage exposure over the underlying share through structured warrants. However, it is important to note that highly geared structured warrants takes a sharp share price swing in order to influence the warrant price, because it has the lowest in terms of sensitivity, where it takes more ticks in the underlying price in order for the structured warrant to move by 1 tick. And next, remember when I said the trend is your friend until the end when it bends. So you have your trend follower. This investment style of trader tends to go for structured warrants that generally have the lowest gearing. This is due to the fact that these type of structured warrants that a trend follower usually go for have the highest sensitivity, which tends to track the underlying share price closely. As a result, these sort of structured warrants price is higher, thus the lower gearing. Next, we have the day trader. And since the day trader goes for intraday or short term of 1 to 2 days trade position, the day trader will often go for structured warrants with medium to high gearing to obtain the needed amount of leverage for its day trading position. Furthermore, the day trader will look for structured warrants that have moderate sensitivity in order for them to realize gains within a day. With moderate sensitivity, underlying share price have to swing of about 5 to 10 cents, or what this means in ticks is 5 to 10 ticks in a day, to allow the structured warrants to capture certain degree of the share price patterns. And as for the last one, as a contrarian investor, the investor goes for the opposite trade of what the market is expecting. In short, contrarian investor sees opportunity as contrary to popular belief in the market. Contrarian investor typically search for structured warrants with low to medium gearing, along with moderate sensitivity. This type of structured warrants are typically moderately out of the money and have a longer time to maturity, which means a further expiry date. So this style of investment tends to be medium to long-term in nature, to allow the structured warrant to develop a trend in price that is close to its underlying share. So contrarian investor would sit out and wait for the strategy to play out over time, hence the need for a further expiry date in the structured warrant. So if you've been following closely, the amount of gearing is underpinned by the structured warrant's price. When a gearing is high, a warrant price is low, therefore providing the higher leverage, and vice versa. When gearing is low, warrant price is high, thus reducing the leverage effect of the structured warrant has. So what this also means is that structured warrants with high gearing tends to be warrants that are out of the money, thus the lower price, while warrants that have a low gearing are mostly in the money, which means a higher price. Okay. So next, you may have saw in the previous slide that there's this word called delta. And I'd like to bring to your attention on an important term to remember, which is delta. And you may ask, what is delta? Okay. So delta is a risk metric that estimates the change in the price of a structured warrant given a 1 ringgit change in the underlying share. Delta is expressed in percentage term to quantify the absolute changes in the structured warrant price relative to the underlying share price changes. So for example, if a call warrant has a positive delta of 50%, what this means is that if the underlying share increases in price by 1 ringgit per share, the call warrant will also rise by 50 cents, with all else being equal. However, do take note that structured warrants have an exercise ratio. Thus, the rate of change of a call warrant differ depending on the exercise ratio as well. Another interpretation that you can take from delta is that a structured warrant's delta is also the probability that it will mature in the money. It can be used as an indicator of the likelihood for a call warrant to mature in the money with 100%, or also known as delta 1. So 100% delta is 100% likelihood or probability that the call warrant will mature in the money, and 0% being not probable at all. So delta values can be positive or negative depending on the type of structured warrant. So for a call warrant, the delta will always range between 0 to 1, because as the underlying share price increase, the call warrant will follow suit. But for put warrants, the delta range between -1 to 0 because it moves in the opposite direction of the underlying share price. So if the underlying share price increases, the value of the put warrant will decrease. So if you look on our warrants website, delta is actually expressed in percentage terms. So therefore, understanding delta is key in helping you determining how a warrant price would likely to change as the underlying share varies in price. When a call warrant is in the money, it will get closer to 100% as its expiration approaches. While if it's at the money, it will have a delta of 50%, and out of the money call warrant would have a delta of 0 as expiration nears. Hence, the deeper the in the money the call warrant, the delta will be closer to 1, and the call warrant will start to behave more like the underlying share, and vice versa for put warrant. All right. That's a mouthful, I know, but I hope this explains delta clearly. All right. Moving on. So once you have got your trading idea, you've determined your direction, you've recognized your style, you've recognized your investment horizon and risk appetite, what's next? So next we have is the process of selecting the structured warrant that is fit for your purpose. Say you have decided that you're bullish on Dagang Exchange, a company that has footprint in both semiconductor through its subsidiary Silterra and oil and gas through Ping Petroleum. You're bullish on the fact that demand for semiconductor and crude oil will remain strong for the year. And you've already shortlisted among all the call warrants available in the market to DNEX CN and DNEX CM. So let's go through the table above and dissect each call warrants term. Let's start off by assuming that Dagang Exchange share price is at 80 cents. So as you can see, DNEX CN has an exercise price of 78 cents, while DNEX CM exercise price is at 88 cents. In between the two, DNEX CN is considered 2 cents deeper in the money because of the lower exercise price, or also known as strike price. As for expiry date and exercise ratio, there's no difference between the two, as it has the same expiry date on 30th August 2022 and exercise ratio of 2. So moving on, the moneyness of DNEX CN is at 2.6%, while DNEX CM is 9.1% out of the money. What this means is that DNEX CN has both intrinsic value and time value, whereas DNEX CM has only time value. And if you look at the delta, DNEX CN has a delta of 49.1%, and DNEX CM delta is only at 29.1%. So recalling from the previous slide, when a call warrant's delta is 49.1%, it is an indicator that it has a 49.1% probability of expiring in the money. And as it gets deeper in the money, the more the call warrant will behave like the underlying share. With that said, DNEX CN is deeper in the money and with a higher delta. So moving on with sensitivity, a warrant is considered highly sensitive when it has low number of ticks. The lower number of ticks, the higher the sensitivity of the warrant. And the opposite is true when the number of ticks is high, the lower the sensitivity of the warrant. In between DNEX CN and DNEX CM, it is apparent that DNEX CN is the more sensitive call warrant, as it has the lower number of ticks at 4.1. What this means is that for DNEX CN to move by 1 tick, DNEX share has to move by 4.1 ticks. So to have a better visualization of this, you can visit our Maybank Warrants website and head over to the live matrix for DNEX CN to see the indicative bid and offer prices of the warrant on various price points of the underlying. As for premium, or also known as the break-even price, DNEX CN has a lower premium than DNEX CM at 14.9% versus 23%. What can be understood from this is that if you have purchased DNEX CN, DNEX shares would have to increase by 14.9% at maturity in order to break even. As a consequence, it takes lesser for DNEX CN to achieve its break-even point in comparison to DNEX CM. You don't need to calculate the premium for this or even the break-even price, because these informations are readily available on Maybank Warrants website's warrant terms page for the respective structured warrants. However, not everything about DNEX CN is brilliant, because DNEX CN offers lower effective gearing than DNEX CM. Remember, effective gearing measures the percentage change of the warrant price with a 1% change in the underlying share price. So for DNEX-CN, with 1% change in the underlying share price, it will move by only 5.2 times. But DNEX-CM will move greater at 7.2 times. Thus, DNEX-CN actually provides lower leverage as compared to DNEX-CM. It is important to note, however, that this can be a double-edged sword. If DNEX share price drops by 1%, DNEX-CN and DNEX-CM price will also decrease by the factor of effective gearing. So in terms of time decay, DNEX-CN has lower theta at 11 days, and DNEX-CM is slightly better at 15 days. The reason being is that the higher the theta days, the longer it takes for the warrant price to decrease by one tick size. So in this sense, DNEX-CN is slightly inferior to DNEX-CM because every 11 days, its warrants price will decrease by one tick size. With all that being said, DNEX-CN can be considered as the better call warrant as it has a lower exercise price, it is deeper in the money, has higher delta and sensitivity, as well as a lower break-even point. Despite the fact that it's inferior in terms of the effective gearing it offers and theta days that it has, but if you look at it from the perspective of opportunity cost, DNEX-CN would be a better call warrant as it has, number one, both time value and intrinsic value. Number two, better probability of expiring in the money. Number three, better trackability of the DNEX share due to its sensitivity. And number four, a lower break-even point. So you'll be foregoing only two factors, which is the lower effective gearing and theta. So this is a basic comparison that you can do when you are selecting between two call warrants that have the same warrant terms, similar warrant terms over the same share. So if you are having an investment horizon that is longer, do take note of the expiry date. And if you want something that tracks the underlying share price closer, take note on the sensitivity. And if you want to have more leverage, you can always search for high effective gearing structured warrants. Okay. So now, what do I mean by seeing and observing? So with an expiry date and the passage of time, there's something very important to remember is that structured warrants have time decay. Once you have bought a structured warrant, you must be aware that the warrant will reduce in value over time as the structured warrants reaches its expiration date. Let's see the chart in the example above. So on 28th March, the underlying share price was at 1 ringgit 80 cents, while the call warrant bid was at 8 cents. So fast forward to roughly a month, and on 27 April, the underlying share price remained at 1 ringgit 80 cents, but the call warrant bid was reduced to 7 cents, which brings me to my point of seeing and observing. Once you have bought your structured warrant, it is crucial that you observe and monitor the warrant's price. The reduction in warrant's price, although the underlying share price is the same over a period of time, is owed to the effect of time decay on the call warrant. To sum it up, structured warrants loses its value as the expiration date nears. Hence, time decay is a negative number. All right. Remember, time decay is a negative number. As the expiration date comes closer and closer, time decay is likely to increase because the time left to earn a profit from the structured warrants decrease. On equal terms, no matter how much a share moves, the structured warrants time value premium loses a little each day because of time decay, or also known as theta. Theta is expressed as a negative number, but on our website, theta is expressed in terms of days. So if you recall from the earlier slide, a warrant with a high theta days is it has more time value because it takes more days for it to decrease by 1 tick. All right. And this can be also taught as the amount by which a structured warrant's value would decline each day up to its maturity. So for example, for 15 theta days, the structured warrant would loses its value every 15 days. So that's something to take note when you're selecting your structured warrant. Hence, it is key to remember that structured warrant is a trading tool. So trade it and don't hold it. You wouldn't want your donut, like the one in the slide, being eaten little by little every day, just like time decay on structured warrants. Okay. So another part of structured warrants that is important to remember is maturity date and time value decay. It is vital to remember that maturity date or expiry date is the day that the warrants will expire. The maturity date denotes the last day that the structured warrants is valid. Before these days comes, however, you as a trader will have already decided what to do with your expiring structured warrant. Also, the last trading day for a structured warrant is 3 days before the expiry date. So remember, the last trading day is 3 days before the expiry date. So what this means is that if a structured warrant is due to expire on 29th July, the last trading day will fall on 27th July. In addition, from the previous slide, as a structured warrant trader, time value decay is the measure of the rate of decline in the value of a structured warrant due to the passage of time. Important to note that time value will decay in an accelerated fashion as the structured warrants time to expiry draw closer, since there's lesser time to realize a profit from the trading position. Okay, so far I hope everyone is following me. Is there any questions that you'd like to ask before I move on? You can just click it on the Q&A, or you can post it in the chat. All right. Okay. No questions so far. All right. So in the last part of the path to trading structured warrant is accumulating, right? And if you notice the title, it says trading is a process of accumulation. Why do I say so? It is because when you trade and your mindset is on chasing exorbitant gains, over the long run, you may find yourself in a loop getting into unprofitable trades. As you think the next trade and the next trade and the next trade, you profit big and it will be enough to cover your previous losses. But trading isn't about chasing for exorbitant gains. Successful traders have entry and exit levels, target prices, stop loss, and risk to reward ratio. Experienced traders know how to be comfortable and content with small profits. And over the long run, with the incremental gains from the small profits, it will start to snowball. So ask yourself this question before you enter into any trade. Do you know where you're getting out before you get in? So that's something to always keep in mind. So let's take the example from above, which is over the next CN call warrant, which was issued on 10th December 2021 last year. So from 3rd January to 17th February, the next share gained 66.23%, while the call warrant CN gained a whopping 184.21%. So this share price performance was on the back that DNEX is well positioned for future growth, as it has strategic investment in semiconductor through Silterra and also oil and gas through Ping Petroleum. At the turn of 2022, demand for crude oil and semiconductor were going even stronger. The semiconductor industry was facing a supply crunch, and global semiconductor industry was reporting bumper profits, as Semiconductor Industry Association reported that global semiconductor sales hit a record of USD 555.9 billion all right, 555.9 billion in 2021 alone. Whereas for the oil and gas industry, demand for oil and gas were on the rise as economies around the world were set to reopen and return to normalcy, which led to a rally in oil price from sub 80 US dollars at the start of the year to its highest level of 120 US dollars last month. So if you can see, from the start of the year till 17 February, the next share price gained 66%. But call warrant as a financial tool and instrument for you to gain leverage have gained 184%. So if you have taken note, done your research, or you have followed our Telegram channel Trade with Maybank, you have seen that we have highlighted the next CN a couple of times from the start of the year due to its exposure to semiconductor as well as the oil and gas sector. And also DNEX has been a darling share of Bursa for 2022 thus far. But if you see the chart, things turned bad as the share price dropped, right? So things went south from 21st February onwards. Markets globally were anxious by the threat of invasion by Russia into Ukraine and the uncertain path of the monetary policy globally. So from then on, DNEX had lost 39% since 18 February. But for the call warrant, because of the leverage effect, remember that leverage is a double-edged sword. When share price goes up, your warrant goes up even more. But when it goes down, your call warrant will lose even more as well. So because of the leverage effect from its effective gearing, it had lost 81.48% since then. So this is pronounced as to why structured warrants are meant to be traded and not held, as well as why you should have your entry and exit levels, target prices, stop loss, and risk to reward ratio in place. So for any traders, in hindsight, the DNEX share price run up from 3rd January till 17 February should be sufficient for any traders to feel content. But if you had the mindset of wanting even more and bigger gains, holding on to the warrant, DNEX CN, wouldn't have benefited you in any way. Because number one, structured warrant is leveraged. So on the downside performance of the share, you will face steeper losses and even quicker. Number two, structured warrant is subjected to time decay. Thus, on top of the steeper losses that you face, holding on to the warrant causes you to pay tax because of time decay. So this encapsulates as to why structured warrant is a trading tool. And this is why I say trade it and don't hold it. So whenever you see trading ideas such as DNEX, where it has been the actively traded share on Bursa, think about, having a call warrant that allows you to gain leverage over the DNEX share performance. And from there, you don't actually need a large capital to actually purchase DNEX shares, where you can actually purchase the DNEX call warrant, in this case, DNEX CN, at a fraction of a price for you to gain even more exposure to the share performance. So now that, DNEX CN price has moved down a lot, what other opportunities out there is available? So for example, you have seen DNEX CN, you know the business in and out, you know the company, and you see that the share price performance has been going down. So Maybank IB actually have put warrant over DNEX, which is DNEX HA. You can go on to our website and you can check out the DNEX HA put warrant, and you can see the performance of the put warrant as compared to the underlying share. So in this case, whenever there is a share that runs up, that rallies so fast, there will be a correction looming one day, because what goes up must come down, and bulls goes up the stairs, right? So for any sharp increase in share price, there will be a looming correction that comes along with it. So That wraps up for the educational webinar that I have for today. You can head over to our warrants website by scanning this QR code. It will lead you directly to the homepage where there is a search box and you can find a plethora of warrants issued by Maybank IB. And also, to join our Telegram channel, you may find it on the banner and click it. It will lead you directly to our Telegram channel, Trade with Maybank. Alternatively, you can search for us on Telegram by typing in our channel name, Trade with Maybank, on the search bar up top. And also feel free to drop us an email as well at warrants@maybank-ib.com, or you can go to our website and under About Us, you will find Contact Us. You can leave feedbacks, compliments, or if you have any questions to ask, you can always find us through Contact Us page. Okay, that is all for today. I hope that this was beneficial to you and it has helped you in understanding structured warrants more, and also your process of selecting structured warrants to trade in the market. So if there's any question from the floor, you can always put it into the Q&A box, or you can always put it into the chat. Okay. And yes, as for the deck, the slides will be available on the website shortly after this webinar. All right. Is there any question on the floor? Okay. If there's no question from the floor, I would like to say that thank you for joining us for today. I understand that it's lunchtime. Thank you for taking your time off to join us in this quick and short session on structured warrants. Do subscribe to our channel as we'll post more updates as to what the warrants team would issue over the year, daily highlights as well, research report from MIBG. You will find all kinds of webinars that will be held by us and even by Nick Isan as well. So stay tuned, and also, as always, trade it, don't hold it. All right. All right. I'll end the session here. Thank you very much. Have a good day ahead.